Hey everyone, and welcome to this explainer. I am absolutely thrilled you're here with us today. We're going to be taking a macro to micro journey into mastering the absolute fundamentals of cost accounting. Now, if you're a CMA candidate, you already know that building a rock-solid foundation is literally everything. We aren't just going to look at dry numbers today, okay? We're going to explore the actual architecture of business decision-making. By the time we wrap this up, you're going to see exactly how all these fundamental concepts just kind of lock together.
So here is our roadmap for today. We're going to hit defining the accounting process, users of accounting information, the three accounting branches, the core of cost accounting, financial versus management accounting, and we'll cap it all off with a quick CMA exam knowledge check. All right, let's jump right into section 1, defining the accounting process. Okay, let's really dive into this quote from the American Accounting Association. I want you to notice the specific words they use here. Accounting isn't just about, passively recording history. It is the active process of identifying, measuring, and communicating economic information. Why? Well, to permit informed judgments and decisions. The absolute crucial takeaway here is that the end product of accounting is not a spreadsheet, it's a decision. To truly understand the stakes of this kind of information, think back to the early days of the COVID-19 lockdown. We have two vegetable vendors facing the exact same crisis. Over on the left, we have Mr. Kashubai. He used the information at his disposal to adapt to the new normal, immediately pivoting to online transactions and setting up strict home delivery schedules. But on the right, Mr. Bikram, who operated in the exact same market, completely lacked that decisive information. He remained undecided and basically just waited. The stark contrast between proactive survival and inactive waiting, that boils down entirely to the quality of financial information they possessed. Moving right along to section 2, users of accounting information. Our source material categorizes stakeholders into various specific groups. And as a CMA candidate, you need to commit these exact groupings to memory. Look closely at the internal users, managers, shareholders, employees, and creditors. Yes, I want to explicitly point out that creditors and employees are classified under internal users here, which is a classic exam trap. On the flip side, potential investors and the government sit squarely in the external users category. Section 3, the three accounting branches. Let's look at the first branch. You can think of financial accounting as the external-facing branch of the business. Its primary objective is to provide information to those external users we just talked about, like the government or potential investors. The focus here is strictly on painting a true and fair picture of financial affairs, calculating overall profit, and meeting external reporting standards. Now, contrast that with management accounting. This branch is intensely internal. It's built specifically for people within the organization. Its whole goal is to help internal users make better day-to-day decisions, plan for the future, control current operations, and constantly improve operational efficiency. And it uses both financial and non-financial information to guide that strategy. And now we arrive at the star of the show, cost accounting. This branch deals with preparing highly specific cost information used for fixing sale prices, valuing your inventory, and making really grounded operating decisions. Now, it's absolutely crucial to point out that cost accounting and management accounting are often used interchangeably in the real world. However, cost accounting focuses on the specific nuances of cost accumulation, whereas management accounting has a much broader scope that covers overall performance evaluation. Section 4, core of cost accounting. And this brilliantly illustrates the granular data points a cost accountant actually lives and breathes every day. We aren't just looking at bottom line profit anymore. We are tracking the exact unit cost of a single product. We're dissecting the specific cost elements of an entire department. We're rigidly measuring the volume of waste and technological losses, and we're assigning costs based on the sheer number of activities performed. All of this culminates in deep cost analysis strictly meant for decision-making. To manage all those wild, granular details, cost accounting basically relies on a continuous cycle of preparation and presentation. First, you have cost ascertainment, which is finding those specific unit costs. Then you have cost presentation, where you're reporting that data to actually facilitate decisions. And finally, cost control, which is using that very information to keep future operations strictly within your profitable limits. Section 5, financial versus management accounting. Listen, I want you to take a mental screenshot of this matrix because the CMA exam loves testing these exact distinctions. Actually, scratch that. Just memorize the whole shebang. Under purpose, financial accounting records transactions, while management accounting exists specifically to help management make effective future decisions.
Under application, financial is prepared for external eyes, whereas management is meant to help internal teams strategize. And look over at scope. Management accounting actually has a significantly wider scope because it brings in both financial and non-financial information.
All right, Section 6, CMA Exam Knowledge Check. Let's see what you've retained.
Here is your first challenge. What is the primary objective of cost accounting? Is it A, maximize profits, B, record financial transactions, C, provide financial statements, or D, facilitate cost control and decision-making? Take a second and lock in your answer.
And the correct answer is D, facilitate cost control and decision-making. Remember how perfectly this ties right back to the American Accounting Association's definition? The ultimate end product of accounting is a decision.
Okay, question number 2. What does the term opportunity cost refer to in cost accounting? A, actual monetary expenditure. B, cost of the next best alternative foregone. C, fixed manufacturing costs. Or D, variable selling expenses.
If you guessed B, you nailed it. Cost of the next best alternative foregone. Great job keeping up with this. Let's hit one final, highly technical question. In the context of cost elements, which category includes the cost of raw materials, direct labor, and direct expenses? Is it A, prime cost, B, conversion cost, C, overheads cost, or D, indirect cost?
The answer is A, prime cost. And that officially wraps up our active recall session.
We have covered a tremendous amount of ground today, all the way from the high-level definition of accounting right down to the incredibly granular nuances of cost ascertainment and management strategy. So, now that you understand the absolutely crucial difference between looking backward with financial reporting and driving the future with internal cost control, I want to leave you with this final thought. How will you use this highly structural, decisive data to drive your next big business decision? We're going to trace exactly how it evolved from a tiny, easily overlooked branch of financial accounting into a standalone, strictly regulated profession. Honestly, if you want to ace your exam, understanding this historical progression isn't just helpful, it's absolutely essential. All right, here's our roadmap for today. We'll hit the early days to the Industrial Revolution, the scientific management era, the impact of the world wars, the evolution of costing in India, and finally wrap up with mastering key terminology. Let's dive right in. Section 1, Early Days to the Industrial Revolution. Let's look at the early catalysts for change. It's actually wild to think about, right? The double-entry system of accounting kicked off way back in 1494, but centuries later, it was completely overwhelmed. Why? Well, the Industrial Revolution hit. Suddenly, you've got massive textile mills and railroads popping up, and they weren't just simple merchants. A textile mill literally had to figure out the exact internal cost of converting raw materials into finished goods. Railroads had to coordinate moving passengers and freight across vast distances. They were practically forced to invent brand new internal administrative procedures just to survive this fierce new competitive environment. So, here's an absolutely crucial point for your exam. By the 1880s, newly formed mass production and mass distribution enterprises started borrowing these internal reporting systems from the railroads for their own organizations. But, and this is a massive but, these early adaptations were incredibly limited. They were exclusively focused on prime costs. We're talking strictly direct labor and direct materials. Complex overheads and variances, those weren't even on the radar yet. Moving right along to Section 2, the Scientific Management Era, spanning from 1880 to 1925. During this specific window, the business world exploded. We saw the development of incredibly complex product designs and the emergence of massive, multi-activity, diversified corporations. Think absolute giants like DuPont and General Motors. Now, when you're running a diversified behemoth of that size, just tracking direct labor and materials, that is definitely not going to cut it anymore. And this is where the scientific management movement really changed the game. It gave a major impetus to the field because accountants actually started observing the physical standards of production, and then here's the testable part, converting those physical standards into cost standards. Why is this a huge deal? Because once you have a cost standard, you can finally use it for actual variance analysis and control. It was a total paradigm shift from just recording what happened to actively controlling what should happen. Section 3. The impact of the world wars or the defense expenditure boom? Okay, I want you to ask yourself this highly testable pattern interrupt question. How did global warfare and the sudden, complete absence of competitive markets actually change accounting? Just think about it for a second. During World Wars I and II, the social importance of cost accounting grew massively alongside each country's defense expenditure. Governments needed unbelievable amounts of war materials, and normal market competition basically evaporated. The answer to that puzzle is the cost plus contract. Since governments couldn't rely on normal market prices anymore, they placed massive defense contracts where the price paid to the manufacturer was simply their cost of production plus an agreed-upon rate of profit. To pull this off, you need incredibly rigorous cost tracking. This reliance on cost estimation by parties in defense contracts stuck around long after World War II ended, permanently elevating the profession.
All right, Section 4, the evolution of costing in India, taking us from the CMA all the way to statutory recognition. Before independence, India only had a handful of cost accountants, and most of them were qualified all the way over in London from the CMA. But during World War II, the absolute necessity to develop the profession locally was truly felt. That momentum steadily built up, eventually leading to 1959, which brought the incredibly pivotal enactment of the Cost and Works Accountants of India Act. And then in 1968, the profession leveled up again when the government introduced the cost audit under Section 233B. It's super fascinating to dig into the roots here. The initial leadership to form an Indian institute was actually spearheaded by members of the defense services, who were employed in Kolkata during the Second World War. Their early groundwork literally birthed the Institute of Cost Accountants of India, officially established in Kolkata by that 1959 act we just talked about. The profession assumed massive importance in 1968 when that cost audit was introduced under Section 233B of the Companies Act of 1956. Fast forward to today. At present, that exact requirement maps directly to Section 148 of the 2013 Companies Act. Make sure you circle these sections in your notes. They are prime exam material for sure. And finally, Section 5, Mastering Key Costing Terminology. Just a quick but super important heads up as you study. Many times, people throw around the terms cost accounting, costing, and cost accountancy interchangeably, like they mean the exact same thing. But for your exam, they don't. There are subtle, very precise differences among these terms. So even though they sound similar in casual conversation, make sure you dive into your textbook and nail down the distinct meaning of each one so you don't get tricked on test day. So, as you gear up to crush your CMA exam and join this incredibly dynamic field, I want to leave you with a final thought to chew on. We've just seen how the Industrial Revolution, scientific management, and global wars acted as massive catalysts for this profession. Today, with the explosion of complex global supply chains and lightning-fast business environments, what do you think will be the next great catalyst to evolve cost accounting?
Our agenda for today. We're going to cover 1. The CMA exam challenge. 2. Costing, the foundation. 3. Cost accounting, the process. 4. Cost accountancy, the discipline. 5. Objectives of cost accounting. And finally, 6. The strategic epicenter.
So let's jump right into Section 1, the CMA exam challenge. You know, when you're sitting there in the high-pressure environment of the exam room, precision is literally everything. And that precision really starts with understanding why we even have distinct cost management vocabularies in the first place. Think about financial accounting for a second. It's strictly targeted at external users, right? Your shareholders, creditors, government bodies. It's historical, and honestly, it's pretty limited for internal management because it just doesn't give you unit costs or any real cost control mechanisms. Cost accounting, on the other hand, is your internal powerhouse. It fulfills the needs of management by evaluating the future, computing precise unit costs, and actually allowing for proactive cost control.
Moving right along to Section 2, Costing, the foundation.
Let's start with our narrowest concept. Now, I want you to really anchor this in your memory. This is an exact quote straight from the CMA official terminology, and let me tell you, exam graders absolutely love to see this stuff. It explicitly states, the use of the term costing is not recommended except with a qualifying adjective. Boom, memorize that. It proves to the graders that you know the authoritative source material inside and out.
So what does that academic quote actually mean in plain English? Well, costing is basically just the specific technique of ascertaining or, figuring out what something costs. And because it needs that qualifying adjective we just talked about, we rarely just say the word costing completely on its own. We say job costing, batch costing, standard costing, or marginal costing. Think of it as a micro technique that you apply to a very specific process.
All right, zooming out a bit, we hit Section 3. Cost accounting, the process.
Now we are looking at the systematic framework that's built directly on top of those basic costing techniques we just covered. Here's the official CMA definition for cost accounting. It's defined as the process of gathering of cost information and its attachment to cost objects and the analysis of variances. Now, did you catch the most crucial word there? It's right at the beginning, process. Whenever you write about cost accounting on the exam, you have got to emphasize that it is a systematic process.
Okay, I know that CMA definition is a bit chunky, so let's translate it into 3 easy steps you can instantly recall for your essay. Step 1, gather and attach costs to your cost objects, like, say, a specific product or a service department. Step 2, establish your standards and budgets for those objects. And Step 3, analyze the variances and profitability. When you break it down like this, you can easily see how carefully accumulating all this cost data naturally leads management straight into setting accurate selling prices and measuring performance. It's like a chain reaction.
Let's zoom out one final time for Section 4, Cost Accountancy, the discipline. This is the overarching macro level. The authoritative definition of cost accountancy is the application of costing and cost accounting principles, methods, and techniques to the science and art and practice of cost control and the ascertainment of profitability, as well as presentation of information for the purpose of managerial decision-making. Notice what's happening here. It literally encompasses and absorbs the previous 2 terms, costing and cost accounting, and actively puts them to work.
Now here is a specific nuance that is just pure gold for your written response. Pay attention to this one. Cost accountancy is an academic discipline categorized into 3 distinct buckets. First, it's a science, right? Because it relies on well-defined rules and principles. Second, it's an art, because actually applying those rigid rules requires human judgment, interpretation, and skill. And finally, it is a practice. It's not just a one-and-done annual event. It has to be applied continuously to actively aid management. Trust me, highlighting that science, art, and practice breakdown will absolutely earn you extra points.
Okay, moving to Section 5, Objectives of Cost Accounting.
So now that we've got our definitions locked in tight, why do businesses actually go through all this trouble? Let's weave a little story through these 6 main objectives so you can remember them sequentially. It all kicks off when you ascertain the exact per-unit cost of production. Once you know exactly what one single unit costs to make, well, that naturally helps you fix a profitable and competitive selling price. From there, monitoring those costs enables active cost control and reduction. And by analyzing your division or activity profitability, you're inevitably going to locate wastages and inefficiencies hiding in your production process. Finally, all of this hard work culminates in presenting highly relevant, precise data to management so they can make real strategic decisions.
I really want to highlight a crucial objective right here, because as you're locating all these wastages, inefficiencies, and gaps in your production process, your ultimate goal is taking action. Cost accounting doesn't just sit there measuring data in a vacuum. It actively helps you execute real cost control and cost reduction across your entire operation. That is a massive value add for any organization.
And that brings us to our final section, Section 6, the Strategic Epicenter.
To wrap up this explainer, we really need to bring all these micro and macro concepts together and look at their ultimate purpose. Remember, unlike financial accounting, which is all about external users looking backward at historical data, these cost disciplines are entirely focused on empowering internal management who are looking forward. Cost and management accountancy is specifically aligned to accomplishing the strategic goals of an organization. Every single costing technique, every variance analysis you do, every standard you set, it is all meant to drive the company forward toward its ultimate strategic vision.
As the source material emphatically reminds us, decision-making is the very epicenter of strategic success or failure. And those high-stakes decisions, they are truly only as good as the internal data they are based on. So, as you prepare to absolutely crush your written exam, remember the profound impact of what you're actually learning here. Ask yourself this: without the rigorous application of cost accountancy, will an organization's next strategic move be a calculated success or just a costly guess? Thanks so much for watching, keep studying hard, and I'll see you in the next explainer.